It has been a slow uptrend in the market system on really low volume that we haven't seen since 2008 levels, excluding holidays. Fred, there's a lot of volatility that traders expect to come back into the market in September and October ahead of the election cycle. What are we taking a look at?
Right, well, trading is actually pretty volatile today. There were some poor economic numbers on personal spending, poor economic numbers overseas in Japan on sales, and in Europe on confidence. So that's going to be the driver next week, I think, as well. There's a lot of focus on Fed Chairman Ben Bernanke tomorrow and his comments in Jackson Hole, Wyoming, but chances are that there won't be any significant news emerging from that, and now the focus will turn to a busy economic calendar next week.
So what about volume? Is this the new market that we're trading in? Because 2005, 2009-ish levels were so inflated just because of the volatility that we had. Is this more of the norm, or do you expect vol to come back into the market, vol and volume?
Right, well, they tend to go hand in hand, and today, for example, is the busiest day of trading so far this week, with I think the projected options volume is around 13 million contracts, whereas Tuesday, which was the lowest in more than a year, was 8.2 million contracts, and that's because the S&P 500 really wasn't moving a lot. Right. And so if you look at one measure of volatility of the S&P 500, which is the statistical volatility, over the past 30 days, it's around 9%. So that's a very, very low level. But as more participants come back from vacation and we see more volume and more news flow, then we'll probably see more volatility.
So going into August expiration, VIX contracts were really busy in September and October because we all expected August to be relatively flat, and trading was indicative of that. The SEP24 calls were really, really active. Are we seeing any activity that's, positioning for a higher VIX or more volatility back in the market? What levels are traders focusing on right now?
Right, well, this week there hasn't been a lot of activity in the index options market in general. I didn't check the numbers today, but earlier in the week there was some large blocks traded in some of the exchange-traded funds that track the market in specific sectors like the retail and energy, and then the S&P 500. So there are signs that some investors are positioning for a potential move lower in the market, and we've seen the VIX move up too quite a bit from it was at a 5-year low on the 17th of this month. Below 14%, and now today it was at 18%. So that's a pretty big move, considering, like I said, the actual volatility is so low, only 9%.
Right. And again, I think what investors need to remember too is that the VIX is a percent of a percent when we're looking at movement. So it's a little bit different than like a stock moving 1% or 2%.
Oh, right.
The extremes are completely different animal. And this is a tough question to ask, but it's almost like what do you expect after we go through the election cycle from a historical perspective, and what the markets are telling us now, because we're going we're into the fourth quarter just about.
Right, yeah, that's of course the question everybody wants to know. I think it's safe to say that it's going to be very driven by the economic numbers, and early next week we'll have manufacturing numbers, the automakers will report sales, there'll be construction spending, and then later in the week you have employment numbers, and that'll have important implications for not just the markets but also for the elections on how many jobs are actually being created.
Okay, great, thank you.
All right, thank you.